course, we had this recommendation to buy above the resistance and to sell below the support, and both of them were not triggered. So we stayed on the lines yesterday. No actual trading on the pound. The buy at 29.42 was not triggered, delete. The sell at 28.66 was not triggered, and delete. So today I'm gonna try and identify support and resistance levels. Now, the first thing that we need to care about is this, guys, the rising trend line from the low seen earlier this month. The rising trend line, of course, was confirmed. The importance of this trend line was confirmed yesterday with this low here, with a touch of the trend line. Okay, so we touched this trend line and we started moving to the upside. This, of course, confirms the importance of this trend line. And now, since it's a rising trend line, it is a bit higher than it was yesterday. The trend line itself is very close to the 50% retracement level for this last part of this movement. And of course, that means at 29.04. However, we can still find support in this area because the moving average area starts here very close to 50% level and the rising trend line, and it stretches down to around 86, which is yesterday low. So between 29.04 28.86 to 29.04. I'm gonna consider this to be a support area. And as you can see, guys, we have been updating the support and resistance, and just a little bit to the upside from where it was yesterday. Now, what about the resistance? I think we can update this trend line. Oh my God, I love this. I really, really love this. So as you can see, guys, we have the falling trend line from the top we have seen a few days ago on Monday. The falling trend line touches. The falling trend line, of course, starts with Monday high. It touches Tuesday high, and today current high, or at least the Asian session high, was extremely close to it, and it was here. We have the high at 33, and the trend line is only pips above that. You can see, guys, the highest price reached here was 33. Our resistance from yesterday is 32. So I'm going to update this with one single pip to 33. I love this. I really, really do. You know, that this price action here confirmed the importance of the falling trend line from the top, and this action here confirmed the importance of the support area, which starts at 28.86. Now, what I want to do is, of course, to be ready to capitalize on the break of any of them. It's very easy to do when you have levels that are not very far from each other. So if I break the support, of course, the support starts at 29.04 and goes up, goes down all the way to 28.86. So I want to have a break below the bottom of this support. That's why my sell is going to be, let's say, 20 pips below that bottom of the support area. Fantastic. Now, of course, guys, the stop for this position should be above the resistance area. And let's see if we can place that 20 pips above that 29, 33, 43, 53. Well, it is a little bit higher than I want the stop to be. So I'm gonna just cut 5 pips out of each entry. Make it 15 pips beyond the support and resistance, and then we are in. Okay. Now, what about the limit, the targets for each of these? The targets, guys. Target 1. Target 2 is going to be 27. This is from yesterday. I showed you on the daily chart that it is an important retracement level. But now, target 1, of course, needs to be much closer. I want it to be around 50 pips or so. And that's why here, this low here is 23. So how about 10 pips below 23? Actually, this should be 71. I'm sorry about that. 71, not 61. I'm a little bit, I'm keeping my eye on the technical issues. I really hope that this stream is going well, because we have been facing some technical issues today. I don't know why. Everything was great in every previous webinar, but today the technology is letting me down, so I'm keeping an eye on that, guys. Now, initial target maybe 10 pips below this bottom, because of course when we break this trend line, the next thing we need to care about is the previous touch on the same trend line. This is 23, so we would expect the bears to attack 23, maybe push just a little bit below that. So 10 pips below that is good enough for me. Yeah, this makes absolute perfect sense to me. I'm gonna sell if we get to 28.71 with stop at 29.48, initial target 28.13, and a more meaningful target at 27. Now, what if we want to buy on the break of this upper trend line here? I want to buy if we start trading above this trend line. That's why I'm going to place an order to go long at 29.48 with a stop at, of course, below this trend line here, 28.17. Sorry, 71, not 17. And now the targets, target 1, it's going to be modest. Target 2, a little bit more exciting. Of course, guys, the top from which this thing started was 29.85, and once we break above this trend line, we should expect to reach a higher high above 29.85. Of course, the first thing that comes to mind is 30, but we did show yesterday that we have a resistance at 30.13, a previous top, and also I think we have shown that there is a retracement level at 30.77. I'm gonna yeah, so these are our recommendations for now, guys, for the pound. Hey guys, welcome back. I don't know what is happening today. Although my streaming software is not giving me any signs that there is a problem. It's in green, that little square, it's in green, and it's still counting the time for being streaming live since the beginning of the webinar, but I don't know what is happening on YouTube. I don't know where is the source of this problem. Anyway, welcome back, Nick, Blaine, Michael, everybody who's watching right now, welcome back. And thank you very much for being here. Now we are ready to take advantage of the pound if it breaks this trend line to the upside or this trend line to the downside. Very simple technique, guys. You see, you do not need to be using something that is really complex, a system that is really, really complicated. You don't need to do that. These trend lines, tops and bottoms, retracements, they have been used for tens of years. And to look at them and say, well, they are too simple to make profit in the market is really, really the wrong attitude. I promise you guys, these very simple techniques, I have been using them for 19 years. And I promise you, you don't need something really complicated to make money in the market. All you need to do is to be good in specifying the support and resistance levels that you need to care about. That's it. And of course, you need to trade the breaks of these important levels. That's it. The trick, of course, the skill is to specify which support and which resistance. That's all you need to do. So guys, let's go to our QTimeFX account. And here's a pound. Let's copy these trading recommendations. Buy at 29.48. $29.48. Our stop is going to be 28.71, reasonable stop. $77 pips. Yeah, for the pound, that's okay. And 30.13 is going to be my target. And place now the order to sell 28.71, stop at 29.48. Of course, it's a reverse, as you can see, and our limit is going to be 28.13. Yes, that's good enough for me. And place. And with this, guys, we are now done with the pound. We are ready to take advantage of a break of this trend line here or this trend line here. My own expectation, I'm not really pushing for one side over the other, like in the case of the euro, for example. I'm really bullish on the euro, but on the pound, you know, the chart is not really obvious. You don't have that feel of really one side getting ready to attack the other side with everything they have. On the euro chart, you can see the bulls are ready to do just that. But on the pound, you know, it's not the same. Yet, finding support around key retracement levels and rising trend lines and above moving averages also favor the bulls a little bit. But of course, we do have other signs that are not very strong. That's why I'm not really rooting for one side over the other. I will let the price break, and the level that is broken will specify what to expect on this front. If we break above the resistance 29.33, then go along. If we break below the support 28.86 to 29.04, of course, that means if we break below the bottom of the support at 28.86, go short. Very simple trading technique. With this, guys, we have to take our second break for the day. I don't want to take a break. I want to talk to you 24 hours, guys, with no breaks. But we have to do so to refresh a little bit and to get ready for the third hour. We're going to talk, of course, the first thing I'm going to talk about when I come back is the strategy. We talked a little bit about it before this break, and we're going to talk about it after the break. I'm going to show you examples of how to do that. And of course, we're going to talk about more trading opportunities on gold. Let's see what gold is doing. on the yen. I know you guys are interested in these two very, very much. So for now, guys, it is time for our break. And before I go take my break, I want to remind you that this live stream is sponsored by QTime FX, our favorite forex broker in the whole world. QTime FX offers you a maximum leverage of 500 to 1. They got the award for the lowest forex spread broker of 2018 by ACIFMA. Their spreads are something like 0.4 of a pip on the euro dollar and the dollar yen with zero commission, guys. Client funds are segregated in UOB, a bank which is ranked 22nd place in the World Bank ranking. Open a VIP account with QTime FX with $150 minimum deposit and get up to $500 in free withdrawable bonus, guys. Not trading credit, this is real money, withdrawable money. You can deposit only $150 and get yourself a bonus of $250, or deposit $300 and get yourself a bonus that can be translated into real money of $500, and you can withdraw that, of course. Equity can be withdrawn after $1.5 per lot traded. So to get the promotional benefit, of course, you need to contact us at fx_educast via Telegram. We are here to help, guys. We want to help you. We want you to be successful in the market. We want you to make money. And that's why we are keeping these streams to show you how to trade and how to spot the best opportunities in the market where you can get in and hope for the best profit possible. So contact us. Don't hesitate. Don't think twice about this beautiful and great offer. It is very, very hard to beat such a wonderful offer. I'm serious, guys. You can look all over the world for a better offer. It is very, very hard to get an offer that is better than this for you as a trader. Fantastic tight spreads, zero commission, very generous bonus, and on the top of that, these webinars that are aiming to give you the best opportunities in the market and to teach you how to trade yourself. What is better than that? So contact us at fx_educast via Telegram, and let's open the real account for you today, where you can start applying these trading ideas that we offer you in this stream on your real account and see the profit with your own eyes. Don't hesitate, fx_educast via Telegram. We are there to help. So guys, I'm going to take my second break of the day now for 5 minutes, and I'm going to be back to talk about a trading strategy and more trading opportunities in the market after the break. See you in 5, guys. Okay, guys, welcome back. Welcome. How's everybody doing? Hi again. How you doing? I hope you enjoyed your very short break and that you are ready for the last part of today's webinar. As we speak, the pound is trying to break above the resistance at 29.33, and I think it's going to do so because we have been trading above the moving average, above a rising trend line, so we can expect this to happen. Let's see if it happens. Of course, if it reaches 29.48, our order is there to use this opportunity to make money on the rising move. Now, before we talk about the market, what I need to talk about right now is the second part of my strategy. I was talking about a strategy, of course, which is, of course, the strategy of using the secondary trend as an entry point to go in the direction of the main trend. One of the best things you can do for your trading. Example. Well, guys, this is an example on the euro from earlier this year. Of course, when you see this happening, when you take a look at these areas here, when you start seeing that the highs are getting lower and we reach a second low here that is lower than these areas, then a downtrend is identified. You can, of course, use trend lines to identify that. You can draw them, and you can see that even if you draw the trend line on the tops or on the bottoms, it's going to point to the downside. You can also use retracements to confirm what you have found. For example, when the price is recovering and it taps very close to a key retracement level, that's another indication of a downtrend. So everything on the chart says that this is a downtrend. Now, up until here, we can see that the price is moving in a downtrend. Now, this recovery attempt goes against the direction of the main trend. This is what we call a secondary trend. We draw a trend line on the secondary trend. We find ourselves a very good trend line, touches here, here, only maybe 2-3 pips below the trend line, exact touch here, and again, here, finding support very close to the trend line, and then boom, it is broken. When the secondary trend is broken, it is the best time to get, or one of the best times to get in with a position that goes with the direction of the main trend. The main trend here is, of course, as you can see on the chart, it is to the downside. Now we have a secondary trend that goes to the upside. Once this is broken, boom, here, sell. And as you can see, the market moved fast to the downside, and it was a very, very good opportunity to short. Of course, this is an hourly chart, so the targets are not very, very large. They're not 300, 400 pips. For example, from the break here, once we start trading below the trend line, we were around 1260. We got to around 12 in a matter of hours. As you can see, 60 pips here, very easy to make. And of course, as you can see, more downside action. We got if you wait, of course, you can see that the market is moving in the direction of the main trend further and further to the downside. This is another instance here where the trend line is not very sharp, but it's still a good trend line. Look at these touches here, here, very close here, exact touch here, and then we found support here. Once we break this trend line, the market moves in the direction of the main trend, which is to the downside. And again, all of these examples, guys, are on the same chart, but it's one time after the other of breaking the secondary trend for favor of the main trend. Here, of course, the main trend is still down. We have a secondary trend to the upside. We break it, and then boom. The minute we break this trend line of the secondary trend is the best time to get with in the market with a position that goes with the direction of the main trend. Now there is a number of options here. First, you can place your order to get in the market after a certain number of pips, 10 pips, 15 pips, 20 pips, just like what we did with the pound before the break. We wanted the price to break above resistance or below support with 15 pips, and then we got in. You can do this for the euro, maybe 10 pips is enough. So let's say that this is 11.30. I place a stop at 11.20 and then place a sell stop at 11.20, and then I get in at 11.20, and then the market is falling. The target is always, of course, a new trend low. We should reach a new trend low, and the stop, of course, we cannot determine the stop from only the break of this trend line. We need to use retracement levels or falling trend lines and place our stops above that retracement or falling trend line. And with this, I'm going to show you some examples on the chart. The chart itself, well, how about the euro? I know you love the euro, guys. The euro is trying to move higher, but still we are trading below 1086. A quick note. Now, what if we go back a little bit? I want to show you what happened earlier this year. Yes, this is the case that I'm really interested in. I want to show it to you. I've been talking about this in my training courses since the beginning of the year because it's one classic case of using the secondary trend as a timing machine to generate entries. At the beginning of this year, the euro reached this high and then it got down very fast. Okay, again, it reached a new high and then it got down fast again. So with this sequence, this is a high, a lower high, this is a low, a lower low. With this sequence, you can tell that the trend is down by comparing these two tops and these two bottoms, of course. Two tops, two bottoms, falling trend lines that are parallel, making a very good looking channel. Maybe we can adjust this. Look at this, guys. Very nice looking. Of course, I'm talking about up until here. This is how I want to see the market here. When you are seeing this happening, guys, when you see such beautiful opportunities to identify the trend as at an early stage, then use them. So a high, a lower high, a low, a lower low. And when we draw a channel, it is perfect. It looks fantastic. With this, we came to identification of a trend as a downtrend. Now, we will use the recovery attempts to time our entry in the market. So now that we have confirmed that the trend is down, we have a secondary trend. This is the secondary trend I'm talking about, guys. We can use maybe trend lines like this, for example. Okay. Or maybe channels. Let's see. This looks fantastic to me. This channel looks really, really good. We have two touches here. Yes, we have a penetration here, but it is very short-lived. We have a bottom here that is exactly on this trend line, and the parallel trend line is doing as well. We have touches here, 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 very, very accurate. So with this, I identify, sorry, that this part of the market action is the secondary trend. This is the main trend. This is secondary. Immediately when this trend line is broken, you get in with the direction of the main trend. And what is the main trend, guys? What is the main trend here? It's down. So I'll be looking to Anybody? Sell. I'll be looking to sell the market. Once this trend line or channel is broken, I'll be waiting to sell. Now, there are two things that you can do here. A number of pips, we said this before, or wait for a close. A lot of people prefer to wait for a close. So they want to see a candle closing below this trend line. In all cases, what we are looking is a sell in this area. And the minimum target should be below this bottom. So we compare our entry with the previous bottom, and we want our limit to be below it. And the stop, of course, we can, it's different from one situation to another. It's not the same all the time. If you can place it above this falling trend line, of course, that would be great, but sometimes we can't. So we need to place it just above this trend line, depending, of course, on risk management, not technical analysis. If I want to place my stop here, but it turns out to be 200 pips, then I can't do that. I cannot. But if it's 60 or 70 pips, then of course I prefer to place my stop above this falling trend line. So it's different from one situation to another. Okay, guys? So we get in here, our limit is below here. Here the area is 1330. Okay. So guys, 1330 is the short here. Here we have the previous bottom around 1230. So we're talking about more than 100 pips. I want to place it a little bit below this. Of course, we do have a number of tools to identify where to place our limit. For example, this trend line here makes beautiful, perfect sense. This trend line was at 1184, so I'm selling around 1330, 1325 in this area. And I have a limit at 1185, for example, which leaves me with around 140 pips. And as you can see, the market did go there. So it's a fantastic opportunity to make a triple-digit profit. Okay? Now, after that, of course, this is another recovery attempt, but this is a little bit tricky. It's not very easy to trade. First of all, because the price tried to break above the falling trend line, and second of all, because it's very sharp to the upside. So drawing trend lines may not be very, very helpful here. Maybe if we draw it like this, it's not very helpful. In this case, when or in such cases when the recovery attempt is very sharp, you cannot count on trend lines. This is what I really believe in. I prefer to count on moving averages. So I will not sell here, but once we start trading below the moving average, that's confirmation that the secondary trend is facing problems, and now it's time for the main trend to take over. So I sell below the moving average. My limit should be, of course, below this one. My stop, maybe above the stop, if my risk management allows for that, and maybe closer. It depends on the risk management. As you can see, we started dropping, of course. We tried again to recover, but this time we traded below the falling trend line, and boom, we reach our limit, which is, of course, below this bottom. So if we sell here, that's around 1310. Our limit should be below this low, below 1175. So we're talking about a minimum of 135 pips. 135 pips. Again, triple-digit profit. And one example is also this one. This is perfect. Look at the proximity between the moving average band and the rising trend line. That means here we do have a very important support area. Once we break below the moving averages and the trend line, which means in this area, a short position can be 100% justified. We sell here, the price is falling. Of course, our target should be below the previous bottom. So we sell around this area, around 1250, 1260, and our limit should be below 1180. So if we place that 20 pips below the 1180, that would give us 100 pips. And of course, as you can see, the market did that and did even more than that. We keep doing that until we have a break to the upside like this one. Okay, guys? So these are examples, 3 examples of how to use the secondary trend, the breaks of the secondary trend. This is another example also. Look at this beautiful trend line here. We sell here, and of course this is the target. We got maybe a pip or 2 below this bottom. If we placed 10 or 20 pips, that would not be head, but in all cases we have the chance to achieve this kind of profit here. So guys, it's a very exciting way to get in the market in the direction of the main trend at the right time before the market moves fast in the direction of the main trend, like here. Very fast move here, very fast move here. It is getting less, but it is still a good move. Okay, guys. Now, if you have any questions, please shoot. I'm gonna take a look at the comments. Blaine is asking about my hair. How is your hair? Is always the same. Well, buddy, because this is what is left of my hair, you know. This is the very last part. I had much more hair 10 years ago, 20 years ago, much more hair. But now I am left with just a little bit. So I always do it the same way, you know. There's not a lot of hair that you can do a lot of with. So I can't do anything about that. Like Lego. I love that. Thank you, buddy. Thank you very much. Your nice words. I love them. I really enjoy having you guys here with me. And I, of course, I like to talk to you about anything you want. Football, my hair, my t-shirt, music, anything you like. And of course, our favorite subject is always going to be the market. So guys, secondary trends, the break of secondary trends in the direction of the main trend. Fantastic timing tool to achieve profit fast. Thank you very much for your comments. If you have any questions, please shoot. Now let us take a look at gold. I hope we have time to take a look at the yen too, but gold is my favorite now. And as you can see, guys, we had the only signal from yesterday that was triggered was this long gold. I had 2 recommendations, buy at 81.3. We did not get there, so I'm going to delete this. We got to this one, and we were lucky when the price stopped only 10.4 pips before the stop. We got in at 72.7. Our stop was 64.7. The daily low at QTime FX was 65.74. So we got away with it. If the price continued for 11 more pips, we would be stopped out. But we were not only lucky, of course, when you place your stop in the right place, it's not only luck, it's a part skill, part luck. So we got away. We did not hit the stop. The market stopped 11 or 10, if you want to be exact, 10.4 pips before hitting the stop, and it came back to rising again. As you can see, currently we are almost exactly where we opened this position, so I'm going to consider it a break even. It's only 1 pip loss. You want to consider it 1 pip loss, it's okay. We lost 1 pip on this trade. That's nothing, of course. And it was the only trade executed yesterday out of 10 recommendations. So 9 recommendations were cancelled at the end of the European session, but this one got us in. And as you can see, guys, we are currently trading almost exactly where we opened it 24 hours ago, or we placed the order 24 hours ago, and then it got triggered after the webinar. And now we are closing it with a loss of 1 pip. So guys, what's next? This is the most important thing. What is next? Delete, and let's look for support and resistance levels and try to build our strategy for today. We do have good signs on the chart. First of all, in spite of not reaching the 80s yesterday, we got to 78. 78.8 actually was the daily high, which is higher than what we have been reaching recently. You can see recent tops here were lower in the 70s, but we got to the higher 70s yesterday. And when we dropped, we found support in the moving average area here. And we have this very bullish candle. Again, when we dropped during the agent session, we found support at the moving average. And this whole thing is bullish. I like this. I like where this is going, but we still need to see energy, guys. We're not seeing energy. You know, this is gold. It moves 200, 300 pips a day, but we're not seeing this. We have been 60s, 70s, upper 60s or mid 60s to mid 70s, upper 70s for the whole week so far. It's after, of course, reaching Monday's low, which we perfectly spotted and made a lot of profit on. After reaching Monday's low, the rest of the week has been very boring so far. So today's Thursday. Maybe with the figures coming out later in the day, we'll have something to cheer about. So, support, in my own opinion, as you can see, the bottom of the moving average band on the 4-hour chart is very close to the rising trend line. And the rising trend line itself is very close to yesterday's low, 65.8. So I'm going to consider yesterday low as the support for the time being. 65.8, this is my support, guys. Now, what about the resistance? Well, for that, I really think we can go to the 15-minute chart and draw a trend line, a falling trend line from yesterday high, and see if that makes sense. This trend line is currently running around 74, around 15 pips above current levels. Let's see if that is very close to a retracement for this drop here. I want to see what retracement is closer to the trend line, and I'm going to use this, of course, the 71.4. It's at 1473.7. So 73.7 is going to be my resistance. $73.7. I'm going to use an entry for my long position that is only a few pips above this resistance, but I'm going to place my stop a little bit further below the support. Let me try and build the strategy depending on this view. So resistance, sorry, buy at resistance is 1473.7. 5 pips above that is enough, 4.2. How about 10 pips below the support for a stop? 1464.8. That is 94 pips. It's a little high, but not too high. We are willing to accept that kind of risk on such a volatile instrument. Now the targets, target 1 and target 2. Initial target is going to be the small one for you guys who like their small targets. So it's going to be around 50 or something like that. As you can see, the 50% is at 80.8. We have been talking about this resistance for days now. So we are going to consider it as our initial target, and that leaves us with 66 pips for the initial target. Of course, this is gold, so 50, having this kind of limit is a modest target. It's not. It's like having 30 pips on the euro. While 1495.9, I've been talking about this since yesterday, and of course it's the limit for our long position. Yesterday it was the limit. I did not use the first target, I used the second target as the limit, and I'm going to do the same today because I still believe that gold can really jump. Gold and euro are the two instruments that I feel, and yen of course, these are the three instruments that I really feel that I know where the market is going. Of course, there's nothing certain, but from where I stand, these instruments are offering good trading opportunities. So I'm going to go to my trading platform here, and I'm going to place an order to buy stop at 14.2. The stop is 64.8. and limit is 495.9. The second target, can you see this, guys? Not the first, the second target. Oh my god, we are very close to our entry. And yes, placed. We are very close to that. I think it's going to be triggered any minute now. This is the first recommendation for today, and it is just about to be triggered. Now the second recommendation is going to be a long. If this is triggered, I'm not going to issue a second. It's going to be another long. Yes, for another day. I'm not going to issue a short on gold. A long, if we get to the support 65.8. We're going to see where the stop and limit are going to be. Target 1, target 2. Our stop needs to be, you know, of course, below this trend line. Below the previous bottom, 56. No, that's too much. So I want it to be just below these bottoms here. 64.6 and this one here 62.2. how about 20 pips below that? 62.2, not 20, how about 30? 59.2. yeah, not bad. Now our initial target is going to be, I want it to be something between 50, 60, 65 pips, something like that. So early 70s. What do we have in the early 70s? We have this Fibonacci level at 72.5, while our second target is definitely going to be 1495.9. I really believe in this number, guys. Remember it, 1495.9. When you see the market there, remember that you heard it first here. Okay? So these are the two recommendations for today. I already placed this recommendation. And if it's triggered, that's it. But I'm gonna, of course, place another recommendation to buy at 1465.8. 65.8. Where's the stop? 59.2. And the limit, of course, it's 1495.9. This is my limit for now, and it's triggered, guys. It's the initial one is triggered, so I'm not gonna even place this one. That's it. I don't want to be in on two positions, so that is it. I'm gonna delete this immediately. This is our recommendation, and we are already now in the market. It is triggered, so we have our first recommendation for the day in the market. With this, we come to the end of gold. We still have time to take a look at the end. This is what I was trying to do. I really want to take a look at the end because you know how bearish I am on this pair. Yesterday we had these recommendations, 3 recommendations. None of them were touched, guys. We had a sell at 108.28, not triggered. We had a sell at 108.84, not triggered. Of course, the buy at 109.57 was not triggered. So now let's take a look at what support and resistance levels we have for today. Okay, guys, as you can see, the support from yesterday was 108.33. It was here. It was not triggered up until, of course, the end of the European session. During the Asian session, we got below 33, but not up until the European session, the end of the European session, when we delete and cancel our orders. So with this kind of behavior around 33, I really want to continue. Let me just put it exactly at 33. This trend line, I really want to continue depending on 33. I really do. I really believe it is the support that we need to watch for now. Now the resistance is also still at 84. Unbelievable, guys. As you can see, this trend line is in the 80s. This top here is 884. This is the top I'm counting on. And as you can see, it is very, very close to where this falling trend line is currently running. So no change, guys. No change. I wish I did not delete the recommendations from yesterday, because I think we're going to repeat them in a very, very similar way, maybe down to the pip. So support is at 108.33. If we break this support, I want to be in with a short position. So sell, and you know me how much I prefer the short positions on the dollar yen at the moment, because we do have strong evidence in the market that the trend is down and that we are in front of an opportunity to make serious profit with shorting the dollar yen. I'm aiming for 400 pips, guys, from current levels. I'm not looking for 50 or 60 or 70 or 100. 400 pips. This is what I'm looking for. Okay? So I really believe that we can achieve a lot of profit if we sell around current levels and we wait enough for the price to reach the levels that we are targeting. So guys, here we 10 pips below. Actually, I want to make it 5 pips below 33. Now the stop should be above, of course, above 108.84. I'm going to use 20 pips above that, 109.04. So that's 72, 76 pips. Okay, that's not bad. Now let's talk about the targets. Target 1 and target 2. Initial target. Target 2, of course, is a very long-term target. I'm going to show you why this is the case. Okay, so I'm gonna focus on the daily chart here. I'm gonna show you a few things. Okay, guys, so if we believe that this is a correction, and we have a reason to believe so, or actually more than one reason, then we should trade below this bottom. So guys, this is a fantastic trend line. It looks amazing, and I'm going to tell you why in a minute. But first I'm going to try to see if the parallel trend line makes any sense. It is not as attractive. It's not bad, but it's not super. But this one is absolutely super, and I really hope that, guys, you know how to spot the trend line you need to care about, because of course you can draw tens of trend lines on the chart, but sometimes a trend line shows you that it is very, very important, and I'm going to show you why this applies here. A trend line that connects highs and lows at the same time is usually a very strong one. So here we have the bottoms, these bottoms here, and these tops here aligning exactly to this trend line with the type of accuracy that makes you just fall in love with the technical analysis. Okay, guys, so this is a perfect looking trend line, and of course we don't have penetrations. Once it was broken, it was really broken, and it resulted in a very strong move to the downside. We don't have, you know, that little bit above it or below it. We have a perfect looking trend line. This trend line, of course, as long as we are below this trend line, then we favor the downside. And not only that, of course, we do have this here, this Fibonacci, fantastic Fibonacci level at 109.37. As you can see, it stopped the price here, here, and the last time we were in the 109.30s, this happened, guys, a collapse, a real collapse of the price. So everything on the chart points to the importance of 109.37 and to the downside possibility, as long as we do not break above 109.37. So we have an important level. We tried to break above this important level and we failed. We have a trend line with bearish consequences. We have failures to break above resistance. Everything is pointing to the downside. And this time the downside is going to be very, very harmful. Why is that? Because if the move from this bottom up to the Fibonacci level is corrective, that means the target for this Fibonacci failure is going to be below the bottom from which this correction started at. And that is, guys, 104.45. So this bottom here, let me label it, it's 104.45. It's pretty far from where we are trading right now. Right, guys? Don't you think so? Nick, what do you think about 104.45? Is it very far? Do you think we can go there in no time, or we need a lot of time to get there? It is a very interesting target. Of course, it is a fantastic target for the downside. However, when you look at the chart and when you look at what is happening, you cannot escape looking at this whole move as only a correction. So the move up from 104.45 to 109, I think it was 49. Let me check the high exactly. Yes, 49. 500 pips. These 500 pips, guys, look to me as only a corrective move. And that means we're going below 104. It's very simple. We don't complicate things here. We don't say, oh my God, that is too far. Nothing is too far for the market. Okay, so I'm going to ask you this on the chart. Do you guys believe we can drop below 104.45? Of course, I'm talking about the dollar yen. I did not say that in my comment. Do you believe we can drop below 104.45? I really, really believe we can. And I really, really believe that this is the thing that we should expect from now on. We should be waiting for it. We should not be surprised at all when we see 104, maybe 103, maybe even lower than that on the chart of the dollar yen. But of course, such targets need time. They need time. Maybe not before Christmas. I don't know. Maybe early next year, because we're talking about a large number of pips. And usually, of course, a crash can happen and we can drop 500 pips in one day. But usually, that's not what happens. Most of the days, we move just a little bit in the direction of the trend. So we're going to need a long time to get there. But we are getting there. This is what I expect. Now, that's why we favor the downside, and that's why our first recommendation for today is going to be short. But we specified the in and the stop, but not the limits. So the initial target, of course, is going to be a modest one. If we break below the support, the next support we need to care about is this bottom here, 107.87. And I'm going to place my limit 10 pips below here, 107, instead of how low we got in here. 107.87, let's say 107.77, and see if that's good enough for us. 107.77, yeah, 51 pips, that's okay. Now the second target, I'm gonna hold on to my 104.40, and I'm gonna tell you something. I'm gonna take the 40 off. So my target's going to be 104 for the medium term. Crazy, huh? No, it's not. No, it is not, guys. It's not crazy. It's about technical analysis. It's not about looking at numbers and thinking that, whoa, the market's too far from these numbers. We can never get there. The market can get anywhere it wants. Now, another sell recommendation is going to be positioned to use a failure to cross above the resistance. Let me remind you, the resistance is at 108.84. So I'm going to sell if we get to this resistance, 108.84. My stop here, of course, should be above this key resistance here, the 109.37. It's very, very important. So my stop is going to be 20 pips above that, 109.57. The same stop we have been using for days now. And our limits, of course, initial target will be modest, while our second target is going to be huge. Who says that? It's going to be huge. Who says that? President Trump always used this. It's going to be huge. So our second target on the dollar yen, it's going to be huge. Yes, guys, almost 500 pips from 108.84. If we top there and fail to break above this resistance and start falling, we are looking for a really, really big target. But of course, I'm going to give you an initial target here, which is going to be, of course, modest, reasonable for day traders, 50 pips or so. So, and of course, it's very obvious, since the support is at 33, I'm going to use 108.33, 51 pips as well. And you know what? I really believe in the possibility of moving to the downside to a degree that today I'm not going to issue a recommendation to go long on the dollar yen. And I'm gonna go to my QTime FX trading account and I'm gonna place these two recommendations in the form of orders ready to sell. We have a sell stop first at 108.28 with a limit and stop, let's see, 109.04. Sorry. 108.28, 109.04, and our limit is going to be 107.77. Okay, guys, and place. So we have a short at 108.28, stop loss 109.04, take profit at 107.77. Now the other recommendation is this one. Of course, if we go higher towards the resistance, what I want to do is this. I want to sell again, of course, but this time it's sell limit, not sell stop, at 108.84. And of course, $108.84, guys. We have the stop, of course, going to be at 109.57, and our limit is going to be at the support at 108.33. And we place, guys. Click place. And we have an order. That is, of course, to sell at the resistance, 108.84, with a stop at 109.57. I really hope we don't see these numbers at all. Nothing above 109.37. I really don't want to see anything above 109.37. And, of course, we're going to use the initial target. We're not going to wait for 104. On a day trading position, 108.33 is going to be our limit, and boom, we are now ready to take advantage of the opportunities that I really believe are there on the euro, pound, yen, and gold. I really want to cover more than 4 instruments, guys, but of course with having a strategy to explain, that is very hard within 3 hours. So we are focusing on these 4 instruments for now. Every day we are talking about them, and I'm very happy that we managed to talk about all 4 of them and the strategy within the 3 hours that we had for today. With this, guys, I really hope that for the next 21 hours you're going to take good care of yourselves, you're going to take good care of your account, and you are going to follow these recommendations to profit. And tomorrow I'm going to be back, and I really hope that what I'm going to say tomorrow morning, the first thing I'm going to say to you is welcome to Profit Land. The euro is starting to move higher. As you can see, currently we are challenging the 86 resistance. The high is exactly 86. And the pound is pushing beyond the resistance at 29.33. Things are happening in the direction we are expecting. We still need to see the yen move to the downside and gold move to the upside. All 4 positions. Of course, we are currently in on 2 positions, the long on gold and the long on the euro. I think, yeah, we got in. No, not yet. It's at 91. So we need a few pips to get there. Our long for the pound is at 48. We need a few pips to get there. Our short for the yen is at 28. We need more than 20 pips to get there. So currently, I leave you with 1 open position, long on gold, and many orders placed on euro, pound, and yen in order to use opportunities in the market if they appear, the breaks that we are looking for. With this, guys, we come to the end of one more webinar. Gabriel, thank you very much, buddy. Thank you very much for your prayers, for your wishes. God bless you too. Thank you for being here. It's very, very nice to have you with us. And I really hope that you will be again with us tomorrow, 21 hours from now, exactly 21 hours from now. We are going to start the next webinar for Friday, the last one for this week. And then again next week, I'm going to meet you with more technical analysis talk, with more trading opportunities. And we're going to every day until you guys get bored with profit. Okay? We're having some good days. I really hope that today is going to be a winner in the total of the trades that are going to be executed. Love you guys so much. Thank you very much for being here. I enjoyed every moment. I'm going to leave. The last thing I'm going to take a look at and leave it here on the screen is these recommendations on the dollar yen. And I really hope that not only these, but all the recommendations we shared today are going to be celebrated with the profit that they are going to make for us tomorrow. So I'm going to meet you again, guys, in 21 hours from now, exactly 21 hours. And before I go, I want to wish you all, of course, great trading in the market. Please take care of your accounts. Please always, always never forget about management. Analysis is great, but don't forget about risk management. This is what I leave you with. And as I always sign off, I'm going to say good trading and good luck. But before I go, I want to remind you that this webinar has been sponsored by QTime FX, our favorite Forex broker in the whole world, who is offering you a maximum leverage of 500 to 1, who was awarded the lowest Forex spread broker award of 2018 by the ACIFMA, offering you to trade euro dollar, dollar yen at only 0.4 of a pip in spread with zero commission, guys. We are keeping your funds, our client funds, segregated in UOB, the bank that is ranked in the 22nd place in the World Bank ranking. You can't get bigger than this, guys. And on the top of that, we are offering you is the chance to enjoy a bonus of $500. And we are splitting this bonus offer into two sections, $500 and $250, depending on your deposits. You can deposit as low as $150, guys, yourself a bonus of $250, or deposit $300 and yourself a bonus of $500. Of course, there is a requirement for that, and that's the number of lots traded before you can withdraw, but it's 100% withdrawable, guys. You can trade, you can get to the lots that you need, and then boom, you withdraw your money and you spend it whenever you like. You want to buy that gadget you've been looking at? Go ahead, open your account with us. First of all, you're going to get profit, and then you're going to get bonus. So you're going to get money in two ways. And if you want to go to this vacation with the missus, you open your account with us. You follow these recommendations to profit, or get the bonus and spend it as you like. But of course, to get these promotional benefits, guys, you must contact FX_educast via Telegram. So get to us there, reach us there, and we will be there ready to help you with everything we can. If you have questions about anything at all, we'll be ready to answer them. If you have questions about the bonus, the offers, the spreads, about QTime FX, we are there to answer them with a big smile on our faces. And if you want help opening your account, we are there and we will help you with that, guys. So very, very happy to have been with you all this time. It was a fantastic webinar, and I really believe in the recommendations that I gave you today, guys. I really believe that they can provide you with very good trading opportunities. As you can see, now the pound and the euro are moving to the upside. Gold is still, lacking that energy. I hope it follows them, and I really hope the dollar yen is moving to the downside. We have orders to use these opportunities, so use them, and let's meet again tomorrow and talk about the profit we made. Okay, guys, best of my wishes to you. Good trading and good luck, and see you again tomorrow, guys. Bye bye.